Hello, welcome back to Profit Path. Today, markets are digesting a weaker jobs report and shifting momentum across sectors. Investors are keeping a close eye on what's next. If you're new here, hit that subscribe button for daily market clarity. The August jobs report came in weaker than anticipated, showing just 22,000 new jobs added and the unemployment rate ticking up to 4.3%, marking one of the weakest prints in recent months. For the broader economy, the details weren't all bad, with wage gains moderating slightly and the labour participation rate rising, suggesting some positive developments. But today's figures do add to evidence that the US economy is losing steam. Bloomberg reports. Financial Times. Headline: Weaker US jobs data boosts hopes for Fed rate cut this month. The August jobs report was notably under the Dow Jones estimate of 300,000 new jobs, suggesting a potential cooling in the labour market and the broader economy. In response, the Dow Jones Industrial Average slid roughly 0.5%, the S&P 500 dipped about 0.3%, and the Nasdaq Composite slipped 0.1%. The pullback comes after Thursday's mixed bag, where the Dow rose 0.3%, the S&P 500 was flat, and the Nasdaq declined 0.4%. However, despite Friday's pullback, the S&P 500 and Nasdaq logged weekly gains of roughly 0.3% and 1.1% respectively, while the Russell 2000 Small Cap Index rose 0.5 to 1%. The CNN report. On the fixed income side, bond markets rallied on the weaker jobs number as traders ramped up bets on a Fed rate cut next month. Short-term Treasury yields fell to their lowest levels since early 2022. The yield on the 2-year Treasury note slid to 4.55%, the lowest level since February 2022, according to TradeWeb data. The fall in yields came as traders ramped up wagers on an interest rate cut by the Federal Reserve after the softer-than-expected jobs report. The Wall Street Journal. AP News also reported that initial claims for state unemployment benefits held near a 9-month low last week, suggesting that despite some weakness in the labour market, it remains resilient. Initial claims for state unemployment benefits were 230,000 for the week ended September 2nd, down 4,000 from the previous week, the Labour Department said. That was the lowest reading since late November and suggested continued underlying strength in the labour market. Big tech names took a hit, with Nvidia leading the decline among the largest companies in the S&P 500. Nvidia dropped below its 50-day moving average after 4 straight down sessions. Advanced micro devices Apple, Microsoft and Alphabet also saw declines. Investors' AP News. On the other hand, Tesla shares saw a jump of nearly 4% after news of a proposed $1 trillion performance-based compensation package for CEO Elon Musk. The electric vehicle maker has been in the spotlight due to its increasing stock price and market capitalization, making Musk the richest person in the world, according to Investopedia. Lululemon fell sharply after the activewear retailer lowered its sales outlook for the year. Shares tumbled 19% in morning trading, one of the biggest intraday percentage drops in the S&P 500. Investopedia noted that Lululemon cut its full-price sales forecast for North America, citing a challenging retail environment in the region. Meanwhile, the company raised its earnings per share outlook for the year, citing strong demand for its products. Broadcom rallied more than 9% after the chipmaker reported better-than-expected quarterly earnings and said demand for its products used in AI infrastructure is picking up. The stock advanced 9.6% as of 1:35 p.m. in New York, poised for its biggest one-day gain since December 2022. Demand for AI infrastructure products is growing faster than previously expected, Chief Executive Officer Hock Tan said on a call with analysts. So we have revised our outlook upwards, investors reported. Hock Tan also stated that current demand for AI infrastructure products could require a couple $100 million worth of additional supply in the current quarter. The comments come amid an industry-wide shortage of AI chips and servers. Bloomberg reported. Switching gears to the broader market sentiment, Friday's inflation release and upcoming economic reports will be key to watch as markets increasingly bet on a 25 basis point Fed rate cut at the September meeting. AP News highlighted that traders are now pricing in a 56% probability of a rate cut next month, up from 46% a week ago. Meanwhile, investors are rotating into more defensive names such as utilities, consumer staples, and healthcare, while shedding positions in technology and financials. With that, let me know your thoughts in the comments. Do you think markets will bounce back quickly, or is a deeper pullback likely? And if you found this video helpful, hit subscribe so you don't miss tomorrow's market update. Thanks for tuning in. See you back here tomorrow.